What's going on, guys? I hope you are doing well today. Yeah, I feel pretty good, not gonna lie. I expected the price to dump and we are currently dumping. All right, I was reluctant to initiate a trade on Bitcoin yesterday, but I leveraged that information to actually initiate a short on Ethereum last night, and it was freaking phenomenal, man. I think I caught the damn near top of that one. I was a couple of dollars off. I closed it super early because, uh, I am risk averse, believe it or not. And yeah, I think the price dumped to like 6% or something like that, roughly 6, 7%, but I only got 3% in. So, I mean, hey, I'm happy with 1 to 3% profit, frankly, in a given move. Um, yeah, so anyway, all right, gonna get into today's prices for Bitcoin. Usually I talk Bitcoin, but as you know, I've been talking about this every time on my channel that whatever Bitcoin does, all the altcoins will follow. So if you know the direction of Bitcoin, you know the direction of the entire crypto market in general. Okay. Anyway, so I did a Fibonacci extension just now, and I marked key levels here. So if this diagonal line, this dotted green line right here, does break, I'm looking for a couple of bounce zones to keep my eye on. I'm going to actually delete the Fibonacci extension. I did it from the top here to the bottom. Got this particular zone here, especially on the daily. Fibonacci's are highly respected. So what does that look like? It looks like these two lines. So the 618 Fibonacci retracement level is usually a nice bounce zone, but given that if it's breaking out of a bear uh, uh, trend, if you will, which as it stands, this daily trend here, let me actually draw the top for you all. I didn't really do that last time. Yeah, so we kind of have this like top side. It could go on and on and on and on. Um, but yeah, we do have this topside resistance. Essentially, this would be a very, very, very big rising wedge channel, rising wedge pattern, I'm sorry. And yeah, this could continue on. I mean, there could be a bounce around this zone at like 23.3 and then kind of reverse, pivot, go all the way up to 26, bounce, pop, 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 pop. You know what I mean? Like a little pinball. You can do that, boom, 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 until it decides, right? Until it decides which way. Yeah. Usually the statistics on these are the likelihood of directional breakout is usually to the downside. Now, it doesn't take away from the fact that these sometimes do break bullish. Yeah, I'm not really happy with the overall daily. Yeah, I'll probably do that another time. The top side, I'll yeah, but I'll do that later. As you can see, the 100 EMA is currently being tested on the 4 hour. But yeah, I'm kind of jumping around and stuff like that. I'm kind of breaking patterns. So let me to get into the indicators. All right, as you can see, about 1, 2, 3 days ago, we had the sell signal. I talked about it. Yeah, and it's still playing out. I mean, if you had just considered you know, once really like, I don't like sell signals just by themselves. You have to have various other things kind of in conjunction with everything else. With other indicators, but like this sell signal is a pretty telltale sign that we're going to see predominant moves to the downside. So even at candle close, if you had just opened up a short at that point, you'd be up 3%. But of course, if you zoomed in, you could probably get like these wick tops and maybe even make it more, of a juicy move in regards to Bitcoin. Now, Bitcoin's great. Like if you're, because Bitcoin, you kind of have to use leverage with Bitcoin because these moves, even on the daily perspective, aren't that fruitful, if you will. Like 5% is great, but you have to wait 1, 2, 3, 4, 5, 6 days. You have to wait 6 days to get a 5% profit. To me, that's not like that's not ideal from my perspective. Um, So yeah, I mean, like in regards to more intraday stuff, because this is daily is more macro, um, but I like to do more like on the hourly, 4 hour. I like to like figure out momentum on the 4 hour, and then I'll go to the 50 minute to look for entries. So how I do it usually is like daily. I look at daily trend, mark that down, because the larger the time frame, the more respect it has. Okay, so you look at daily trend. Okay, so it's pointing to the downside. Okay, so now I have a bias where it's like, okay, I'm going to predominantly look for shorts. Doesn't mean it doesn't mean that there's like longs that you can't take, but if you want to be safe, you go with the trend. So it'd be like, okay, I'm going to look for shorts, and then I'm going to look for the 4 hour. If the 4 hour is in conjunction with that, which at this time it's not, because essentially we're kind of getting a little bit of a bounce on the 100 EMA. So we could still like bounce up here, which is a 4% pump, and then ultimately create a lower high, because this high is up here at 24.87, and we have a potential to even go a little bit lower than 24.2. So as long as um, a 4 hour candle closes below this 24.2 range, which is a 3.6% cushion, then you're still in the good. Technically, this would be considered a local top as well at 24K. So as long as candles are printing below 24K, you know, you can be bearish. So you can wait for a bounce to kind of initiate, then you can get a better entry. Anyway, I'm venturing off of my traditional processes, but just something I wanted to address because it's really important. I've been talking to some traders and they're really confused on how to really read these indicators, you know, parallel with one another. So that's just something I wish to address. But anyway, as you can see, we are now printing a TSI of red where the fast moving average has now crossed the bottom. Now, before I do anything in regards to opening up mega shorts or whatever like that, or like using like a good chunk of my trading capital, okay, my trading capital, not my entire bag. I have 90% of my crypto is like in cold storage, okay, but I do have 10% crypto. I have 10% of my crypto, 5% in spot positions, and then I have another 5% in leverage positions. Okay, so I do diversify, and then once that pool gets larger than 10%, I will move, you know, that stuff into cold storage. So that's kind of my strategy, just to keep myself from, you know, getting completely destroyed in trading. But anyway, the daily is crossing to the downside, so you have to be a little bit more biased, as more so than usual. I mean, I've been talking about bias to the downside for days now. Um, yeah, so probably 1, 2, 3, 4, 5 since yeah, for like 3 days I've been pretty legitly biased bear. So you know, I'm feeling good that this is actually coming to fruition. I felt really bad. I was watching a bunch of like these irrational bulls be like, "Oh my God, like we're you know gonna break new all-time highs and stuff like that, you know, in a week or whatever." I'm just talking out of my ass, but I don't know. Like these people, they don't know technical analysis. They know hype. They know how to move a crowd, if you will. They don't read charts. Like yes, they might bring up charts and stuff like that. They might bring up good news that like favors their narrative, but at the end of the day, like they don't know technical analysis, and that's like the basis of all, like out of anything. And look, I have my own blog, Brain Trust Crypto. You can, it's in the description below. You can read it, stuff like that. It does like 24/7 articles. It's all automated, by the way. It's a bot that I built that like actually aggregates all of this information and just puts it in one location. And I basically all those articles that are published on Brain Trust Crypto. It's essentially like 12 different articles, publications, and it aggregates all of that information into one website, which is Brain Trust Crypto. So that's why I built it. Really, it's initially it was as a tool for me, you know, to keep up with the news and stuff like that, major news events, because some news does drive price, but at the end of the day, technical analysis is truly what you know, tracks price and all that kind of stuff. So that's why I put a lot of onus onto it. But anyway, I'm going to go to the MACD. So the MACD on the day, oh wait, that's the 4 hour, I'm sorry. The MACD is crossing down. Oof. Oof. Okay, we are getting multiple signs of bearish divergences here, and the other indicators that we'll come across will actually show you similar things. Yeah, we are getting multiple bearish divergences here on the daily. That's pretty visible, pretty powerful, if you ask me. And yeah, the lagging indicator is starting to show signs of definitive crosses to the downside. All right, so I'm going to delete these because it might actually interfere with my other time frames. Okay, so the TSI is also saying similar things. So as long as price is below 24,111, okay, 24,111.23, we can expect prices to the downside, okay? So you can actually essentially just put your stop loss right there, right? Not financial advice. You can put your stop loss there. You can like put it slightly above that. So if you are in a short position right now, you can, have that as a stop indicator. That's why I usually talk about these particular numbers, because these are general prices to keep your eyes on. All right, so as you can see, the MACDX is visibly, that's why I love the MACDX. It's an augmented MACD. What I told you in regards to the divergences, it prints automatically. That's why I love the MACD. It's really color coded, color coded, and actually shows some sell signals sometimes, of course. They're more accurate on the weekdays because institutions actually trade, buy and sell on the weekdays and stuff like that. They usually don't do anything on the weekends because they're closed. So that's why you got all this crazy wonky stuff happening on the weekends where price will pump 10% and then, dump 9% the next day or whatever the hell. It gets really crazy. So yeah, I really like the MACDX because it has these built-in systems that indicates divergences and stuff like that. But anywho, as you can see, the slow-moving average, my favorite aspect of this indicator is the red line zone. The zone in the red line is because once you kind of see it kind of giving out, and there's like a bowling instance, I like to call it like rolling over. Once it kind of like rolls over, that is an indication of a bearish instance, as well as whoopsies. All right, as well as the contrary. Of course, there are indicators where it'd be like, oh my God, there's a bearish divergence, like we're probably going to reverse and stuff like that, right? So in the bullish case, once you see kind of like this rolling up and rolling down, that's when I get very excited and I look for swing positions. Yeah, it doesn't always happen your way, obviously. That's why stop losses are necessary, because there are fake outs. And also another reason I don't necessarily like to use the daily as my indicator. I like to go deeper into the hourly and the 4 hour to really get a better assessment of actual swing opportunities. Daily is good for, in my opinion, like dollar cost averaging situations for monthly holds, annual holds, stuff like that. But anyway, I'm going to go to the RSI on the daily here. So we did get this cross down. I believe it was, what, yesterday? Yeah, we got this cross down yesterday, and we did finally print a lower low. Hasn't happened in a while. Now we're still in the neutral zone. The slow moving average though is pointing down. That's not indicative to positive price action, but we haven't necessarily had a clean retest. So what could happen is this comes right back up, back tests the slow moving average as resistance, then we're going to Goblin Town. Now, there was such a staunch and powerful trend to the upside. It's hard for me to just say that this is actually going to come all the way back down into the bearish control zone and stuff like that. There's still an opportunity to print a macro low, to then pivot to maybe even higher prices later on. So it's not set in stone that we're going to completely just get destroyed from a price standpoint. But you got to take in consideration the RSI is pointing to the downside, and you gotta respect that at the end of the day. So this is an interesting point on the TMA. The TMA is actually as well printing lower lows, and it's about to cross. It's literally right there on the 50 line. So the 50 line, essentially powerful moves happen when this is crossed. cross down or cross up. In this case, there could be an opportunity for a cross down. Now, what I don't like, frankly, is that the slow moving average is at 47.2. So to be safe, you can either wait for a cross below 47.2, or you can, be a little bit more cavalier. And once the TMA is crossed below the 50 line, you can feel a little bit more better in regards to your shorting positions overall. But keep in mind, I like to use the 15-minute for entry points. So whatever the 15-minute says, that's more biased to the bearish side. Like essentially, like if I'm looking at, so for example, I wouldn't use the TMA per se. I would actually use something else to really figure out what I'm going to do on the 15. So let me give you an example here. Let me resize this. Whoa. There you go. So essentially, like, if I'm looking for shorts, let's say the daily bias is short, right? Like, I'm going to go on the 15-minute. I'm going to go to the TSI. Then I'm going to look at something like this. So the TSI crossed above the overbought zone, and then it crossed back down. That's inherently bearish. Also, I noticed on the 15-minute that the TSI fast moving indicator crossed below the slow moving average, and there was a pivot in color from bullish to bearish. So at that point, if I know the daily trend is bearish, I know the 4-hour trend is bearish, and I'm on the 15-minute, and this is showing me a bearish sign, there's a high likelihood that I'm going to have a successful trade because of my entry. You know, you'd have to wait this out, right? You'd have to wait for a while. And this is why patience is so important, because patience gives you really good entries. So basically, I had to wait almost 2 days, right? I had to stay up at 3 a.m. or whatever the hell, you know? And I've done that. Actually, that's what I did yesterday. I was like trading at 2 a.m. But like yeah, like essentially you kind of have to wait it out a little bit because there will be some choppiness. There will be some crazy uncertainty going on. And I mean, like if you're gung ho and you're cavalier, I mean, you could take on these like micro dumps to the downside, right? You could take that one. You could try to take this one. But really, I myself, as a trader, I like to just like pos get my position so right that um, I don't have to worry about the price flipping against me. You know what I mean? Like I have like a 2-to-1 ratio. So like I'll have a position size that's equivalent, right? So let's say I'm longing, okay? I'll put in the long position, okay? And let's say it doesn't go my way, right? So I don't put all of my trading capital all in at once. I'll actually have um, I'll have 50% of my, let's say I have $200. I'm putting in $200 into this trade. And let's say it doesn't go my way, right? I find a support zone that's actually 1.5% lower than my entry, and price is actually there. Okay, I'll wait for a support to kind of like show itself, and then I'll double down. Or I won't double down. I'll just I'll put in $100 just to kind of like offset my my mistake in getting in at a not ideal entry. So like there's ways where like I can secure myself in getting a good position overall. But anyway, yeah, so that's why I use the TSI. The TSI is really good at finding these oversold and overbought scenarios, indicators that will really be helpful in overall positioning. So as you can see, if you waited, let me show you an instance. Let's say you figured out the daily position was bearish. You could have gotten in either right here, at the very top, here, or even here. Even if like this big candle, if you got the tail end of that candle, if you waited till a candle close to confirm, you would have still gotten a sweet trade at like 3%. And this is Bitcoin, mind you. This isn't like an altcoin. This isn't Solana. This isn't Cardano. This isn't Dogecoin or Shiba Inu. This is freaking Bitcoin. And you would have got a nice 3% trade. Phenomenal stuff. But anyway, I'm really digressing from my initial trend here. So, all right, so I went to the daily. Let's go to the 4 hour. Okay, I'm going to start off with the market cipher B indicator. And by the way, in the description below, you can actually check it out. Um, yeah, it's a really badass indicator. It's one of my favorite momentum oscillators, frankly, because it's really customizable as well. You can incorporate like an RSI, a stochastic RSI in here. You can adjust it to your will in whatever you feel is most important. But I just mostly just I love the money flow. I love the blue waves. I like having my divergences printed out for me. Yeah, these little dots right here indicate divergences. Very ideal times to short, depending on position, of course. So like if you're in an uptrend, you ignore bearish divergences. You know what I mean? But if you're in a downtrend, you really want to be aware of these divergences because they're very powerful moves. It's just really simple. But anyway, yeah. So on the 4 hour, we're actually getting a expansion of negative money flow. We still have not printed a higher low instance regarding the money flow here. So from my perspective, we are still going to be we're going to see continuation to the downside. Now we are in an oversold zone, so once we see a buy signal around this area, I mean, you could initiate some form of scalping opportunity. Because so for example, let me go here for example. Okay. And keep in mind, this is an uptrend, so it's going to look really exaggerated to the upside. Now that we're in a bear trend, it's not going to be as intense, but as you can see, market cipher indicator told you that we bottomed out here. Okay, so let me go to the traditional candles, Japanese candles, so you can actually see entry points, and you can kind of gauge it for yourself. But anyway, so if you bought at that 4 hour, just candle close, and you just wrote it up. And you waited until a candle broke below the yellow line, which is a 9 EMA, which is my little secret sauce, not financial advice. You would have gotten 13.1% with no leverage. Yeah, I had to wait 4 days, but yeah. So essentially, like you can catch crazy pivots even though it's not going your way. So for example, you can get crazy moves like this too. So you have to be very careful. You have to have, especially if you're going against the grain. So this was an intense dump to the downside. Intense dump to the downside where money flow was expanding, and this is exactly why I don't like expansion to the downside. Because if you see money flow is expanding to the downside, so is price. And we had a buy signal, right? We had multiple buy signals, but if you bought these, you would have gotten destroyed, completely destroyed. So that's why money flow, you have to pay attention to money flow. As you can see, when money flow started kind of like creating higher lows, let me really zone in here so you can see. It's pretty obvious when I zoom in and everything like that. But yeah, so when money flow started kind of not dumping, and it created this initial instance right here of a higher low, that's when you're like, oh, okay, not only did we get a buy signal and a divergence, money flow is actually pointing to the upside. So you have to have multiple indicators at your disposal to take advantage of these pivots. Now, keep in mind though, you're going against the grain because price is below the 100 EMA. Okay, so the 100 EMA, which is the thickest line, which is right here, the thickest line, you want to know where that 100 EMA is, because if price is above the 100 EMA, you are most likely going to want to be longing as opposed to shorting. So just a fun fact, 100 EMA is very, very important. But okay, I'm going to go to the TSI. As you can see on the 4 hour, the TSI crossed below the zero line. Usually when these cross below the zero line, it's an intense move, and this was a clean cut to the downside. So yeah, we have yet to actually touch the oversold zone, which I am patiently waiting for. I'm patiently waiting for this zone to get tagged and for an official cross to go so I can then initiate along. But as it stands, we're probably going to be some consolidation sideways and down for the time being until we hit some form of divergence in the lower term time frames, which I can get to that later on. Alrighty, so I'm going to go to the MACD indicator. Say the MACD as well crossed below the zero line, which just means it's easier for the bears to push price down as opposed to the bulls to push the price up. And we see an expansion of the histograms, freshly printing red. Now, it doesn't mean that it's going to continue to that way, but as you can see, we can have waves within waves. So it's just best to not jump the gun, and you're more so going to want to wait for a pivot swing opportunity for a long position if you're thinking in that mode, not financial advice. All right, so as you can see on the TSI here, and I talked about this yesterday. We got this confirmed rejection from the slow-moving average right there. The fast-moving line was trying to cross above it, but it just was unsuccessful, and it actually created a lower low, and I talked about that. And now it's completely going clean to the downside. Whoops, going clean to the downside. And yeah, as long as price is below 23,637, we can expect lower prices. Okay, so let's see what we got here on the MACDX. So the MACDX, the red, is crossing below. We had three divergences. This was that third one was really the kicker. And yeah, we are seeing destructive moves to the downside. Now, we are in a, and I think the RSI does it best, we are actually in a bearish control zone right now. This isn't good. So as you can see, my little trick of the trade regarding the RSI is I wait for the RSI to actually cross below the 34 line and then eventually to cross up on the 34 line. Now, as you can see, the RSI evaded the 34. Okay, so this is not my favorite type of signal. What's most likely going to happen from my perspective is that this will eventually come to the upside. Oops, it'll eventually come to the upside, back test the slow moving average as resistance again, and then come down. That's what I'm expecting. If it doesn't happen, it doesn't happen, whatever. This, strategy got front ran or whatever. That's completely fine. Yeah, but at the end of the day, like, you can't sacrifice your capital. You can either wait for that cross up on the 34, or you can wait for the fast moving average to cross the slow moving average, back test it as support to see the price then run up and kind of, do, its thing and create higher lows as opposed to what's currently happening, which is lower and lower highs. Okay, so I'm going to move on to the TMA on the 4-hour. So yes, we haven't really had a successful back test of the the slow moving average. The fast moving average here isn't cooperating with my initial thesis of, like, okay, I was going to consolidate, back test it, and come down. It just completely skipped the back test and just went straight down. So from my perspective, usually this slow moving average is a magnet, so I would expect, in my opinion, to eventually see some type of rally to the upside, but ultimately to then test it as resistance and then come back down to these zones. That's just my thesis at this time regarding the TMA on the 4-hour. But okay, so now let's get to the juicy intraday stuff on the 1-hour, shall we? Okay, as you can see, we are getting some crazy whale manipulation. My market cipher A indicator does print these X zones here, these little X marker, and yeah, that's usually a sign of whale manipulation, where essentially, like, these wallets with a lot of crypto are dumping on the market to manipulate the market. Now, there's a lot of theories as to who it is exactly. It could be miners who have mined a crap ton of Bitcoin and they have to, sell to cover electricity costs and maintenance costs or whatever, or it could just be, traditional hedge funds or traders. It could be whoever. It's just huge account holders that are manipulating the price in their favor. So that's kind of like what's happening. Usually when these happen, I like to get out of the market. I don't like being in thick of whale games. I do not like that. So when I see that, I heed caution to anyone who is considering trading. And yeah, sometimes it's visible on some candle patterns, sometimes it's not visible on others. So that's why like finding it in different like locations is important. So on the 5 minute, for example, we had it right here. Um, yeah, we had it. Let's see, we probably had it in lower term time frames as well. Yeah, we had it right here, right here. hmm Okay. Anyway, yeah. So there was some fuckery afoot. Interesting. All right, so I'm gonna go, yeah, back to the 1 hour. Let's go to the market cipher B indicator. As you can see, we do have a buy signal right here. Um, interesting, interesting. So we kind of have a slightly higher high instance. It's not too great. Frankly, I would much prefer to see a more definitive trigger wave. You could kind of classify this as a trigger wave, but the way that the money flow looks right now, it's not ideal. I would much prefer to see this kind of like develop, kind of like, continue to the upside, sell off, and then create a better trigger wave. This to me is too risky in my for my analysis. This is like the slope of this is too weak for me. I like slopes like this. You see this wave and then this wave. I like just dramatic slopes like that. Really really is good for strong momentum swing opportunities, very low risk. It does have more risk. To me, this looks like, okay, there's going to be chop before any initial reversal to the upside for ultimately a lower high in my perspective, given what the chart is showing. All right, anyway, gonna move on. Let me get the regular candles out here. Okay, as you can see, bulls did try to cross to the upside, but failed not once, but twice. Um, when I don't like seeing this, especially when the fast moving indicator signal here goes green and then it rolls over back into the gray color. That just shows signs of weakness and ultimately, um, a rollover to kind of eventually come back here. As you can see, things like that do happen. So, green, 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 then gray, green, gray. Woo, we're going down even more. So, that could very well happen over here. It is closer to the buy zone, so I would much rather kind of see this come down a little bit more, kind of then kind of create a divergence of some kind and kind of continue forward. So as you can see, there is a battle right now, so it's not definitive that it will go to the downside. If there is a cross, if I see this from red to blue, then I'd feel more confident in something like this, for example. But keep in mind, because it's not like in a better position, say for example this position right here or this position right here, you could get a move to your favor, but keep in mind that you are in riskier territory because you're coming from the middle range of the TSI as opposed to the farther out extreme ranges. Okay. Um, all right, so I'm going to go to the 1 hour indicators here and kind of close it out. Okay, so MACD is actually showing momentum go from, uh, red to yellow. That's a very good sign. Personally, I like to see this wave come up, come down, and it shows me either that I want to see waves in tandems, essentially. So, what's a good example here? I usually don't like to use it on the 1 hour, but um, yeah, I guess I'll show you on my more preferred instance, which is like the 15-minute. So for example, like on the 15-minute, if I see something like this, where I see two consecutive moves like that, like this, then I'd feel way more confident in initiating a long because it just reduces fake out opportunities, as well as this right here. Um, this is like bearish. So that's kind of how I operate. Of course, the 15-minute, given that it's Bitcoin, I don't like trading on the 15-minute with Bitcoin because volatility is not as high as say like an Ethereum or a Solana or like a Cardano or a Doge or whatever. So it's not as powerful. The moves aren't as like lucrative or powerful. So yeah, at the end of the day, it's good to figure out exactly um, when these pivot points kind of do show themselves. But things of this nature, so as you can see, we have a high, we have a lower high. Um, right here, right there, right there, and ultimately, you did kind of get a little bit of a fake out. You could argue that, oh, okay, this is it, and then it pumps, but then ultimately, it does follow through and it dumps. So there are instances where you can have quote unquote trigger waves on the MACD. If you don't want to use market cipher, you can use the MACD for stuff like that. It's just not as accurate in my opinion. In order to get better instances, I might recommend even doing like a smoother. You'd switch this from traditional candles to Heikin-Ashi candles. But at the end of the day, I much prefer to use market cipher for stuff like that as opposed to the MACD. It's just not as accurate in my opinion. But anyway, it's just something, food for thought. Let me go back to the 1 hour here. So, yeah, so as long as price is below 23,359 on the more intraday levels, we can expect prices to continue to the downside. And as you can see on the 1 hour, we have this trend that's been pretty developed. I much rather use it here because it's just more clean. Yeah, so as long as this trend maintains itself, I wouldn't be looking for longs, frankly. I'm more so looking for opportunities to short, do nothing, or simply just, wait for that cross and then a back test to then initiate a better long position because I think we're in a choppy consolidation phase. All right, as you can see here, we had a buy signal, and this is another reason why. We had a buy signal, but the momentum is still pointing to the downside. So you have to be very careful with these divergences, especially after major dumps, because you can get this stuff, man. Oh my God, this was making me laugh. I mean, back to back to back to back bearish divergences. That made me laugh so freaking hard. Because you're like, oh my God, it's a divergence. Yeah. And then like, oh, it's a hidden bearish divergence. Crap. Oh, sweet, another bullish divergence. Hell yeah. And you're like, oh my God. I had never seen this before. This was making me laugh so freaking hard. I had never seen that. I've never seen so many hidden bearish divergences happen all at once. That was so funny. Um, anyway, yeah, because I was trading Ethereum. I was I had a long position on Ethereum, and maybe I could show you that. I'm kind of going off in the weeds here, but I'll show you that another time. Actually, I'll show it maybe in like a different video. All right, so yeah, let me get to the RSI. You see, the RSI has crossed. It's actually trying to cross the fast moving average. So if the fast moving average does cross and is back tested to support, I might actually reconsider my stance in regards to overall positioning. But preferably, I do like to use the 4 hour for trends and stuff. I did print this out not too long ago. I think it was like last video or the video before. But as long as this trend is respected as resistance, I don't feel confident in longing. I'd much wait for that consolidation to kind of finally play out, and then then look for a long position because it's just easier because like we all have long days and stuff like that, like we all work throughout the day, so it's better just like set your position, hold it for like a day or two, recap, look at it, and then either you got stopped out or you're still in a profitable position and you close it out or whatever the hell. I like to use ratios between 2 to 1 profit ratio, profit loss ratio, or a 3 to 1 profit loss ratio. So, if your stop loss ratio is like, 2%, then you're going to want a 4%, profit margin. So, and you can actually set that in. You can calculate stop loss and stuff like that, profit and loss indicators. They're all built in exchanges, so you can do that automatically, so you don't have to like be looking at the screen all day. But anyway, yeah, let me go to the TMA and then get my assessment here, my final assessment. So yes, I do like the fact that this is kind of coming back to the upside. I do kind of expect a relief rally, but ultimately we have yet to tag the oversold zone. So I do feel that yes, there could be some pumpage to the upside still to be had, but at the end of the day, I do feel that the price will eventually come back down to these zones to then, find better positions for maybe a bullish divergence of some kind. All right, so daily consensus. What is happening here? All right, so expansion. When these exponential moving averages expand, I am, leaning that direction, because it just means that people are irrationally bearish right now. There's spot holders that are like, oh my God, I gotta sell. People are freaking out right now, so they're selling their spot positions to hope to buy at a better price later. You have the short sellers, selling at their will to freak people out. As you can see, volume is diminishing. Look, these bars right here, volume is diminishing, but price is still below the 9 exponential moving average. So as long as price is below this 9, I don't have confidence in the bulls at all to flip price. I could be wrong here. I mean, there are buy signals, but I want to see a couple more instances to actually get that going. We did have a divergence right here, not one, but two. We do kind of have like an opportunity here maybe on the 24-minute to get that relief pump, but ultimately because this exponential moving average is bearish, so even if the bulls were able to break through not only the 9, not only the 21, not only the 50, but the 100, even if that at best, we're looking at a profit margin of 2.4%. It's not bad, not bad at all. But it doesn't mean that it's going to hit the 100 EMA. It could get flat out rejected at the 21. As you can see, the 21 is becoming staunch resistance here. So the profit margins for a pump to the upside is not that great. It's 0.25%. Are you kidding me? No, thank you. Best bet right now. Let me turn on the indicators right here. Boom. All right. So best bet right now, from my perspective, is just kind of like hold off, wait and see. The supply line on a macro level is right here. Um, I want to see a reaction here because I do eventually think that price will come down and kind of test it. I want to see what the indicators say at that time. Will it actually, create a bearish divergence or a bullish divergence? And that's when I'll be like, oh, okay, we're actually going down, or hey, we're bouncing. Just don't have enough data to really get a consensus on that. But ultimately, the bears are definitely in control, as you can see, because I'm going to go to the 8-hour, for example. The 8 hours, look at it, it's still um, you know, looking bullish actually. But the 8-hour candle back tested the 100 EMA as resistance. That is the first candle in this zone to ever do that. Well, you kind of had it a couple times here, but that was before the trend. Um, yeah, this is the first candle to actually do that. The 9 is actually crossed below. That's pretty bearish. Um, yeah, it's kind of hard to feel bullish at this time. No signs of support popping up. We do have some support here at 22.662, but that's still pretty far away. The best line of support right here is roughly about like 23,000. So if 23,000 is broken, we're going down. Anyway, I've been talking my ass off today. Yeah, I hope this video was insightful for you all. It's brought a lot of fruitful information. Yeah, please let me know how you think the outcome of the rest of the price action is going to be. Yeah, if you hey, by the way, if you haven't liked this video, please do so. And if you're still here, thank you so much. Yeah, so share with your friends if you think this is valuable. I'm going to cap it from here. Hope you've had a great day, and I'll talk to you tomorrow. Take care. Bye.